Assalamualaikum. My name is Siti Maisarah binti Subo, metric number 254904. Today we would like to present our group portfolios assignment. A portfolio investment is defined as the ownership of a stock, bond, or other financial asset with the assumptions that it will gain a profit or rise in value over time or both. In this report, our group will trade and buy 5 stocks in different industries with the capital of 100,000. We have come out with the 5 most efficient stocks that will maximize our clients' wealth and they will able to diversify risk. We will elaborate more on each stock performance and potential outlook of each stock, which are MyEG Services Berhad, Tasco Berhad, KKB Engineering Berhad, Ford Aeon Credit Service and Berhad, and Wellcall Holding Berhad by using top-down approach to security analysis in our report.
Monetary policy is a guideline to Bank Negara Malaysia on behalf of the government to control the money supply and interest rate in the market. When there is expansion in the economy and the inflation rate is high, the BNM will implement a contractionary monetary policies. Interest rate will increasing, consumption and investment will decline to a level that is more sustainable and return the economy to normal condition. But when there is recession occurred, BNM will implement an expansionary monetary policy that will encourage consumption and investment activities, thus increase the economic activities. Due to COVID-19, BNM has set the overnight policy rate at 1.75%, which is the lowest rate since January 2020. Malaysia economy starting to recover in April 2020 and improve the household spending, labour market condition and also trading activity. Fiscal policy is related to the government spending and tax imposed to control the economic fluctuation. When inflation rate is high, government will impose a contractionary fiscal policy. It will reduce the consumption level and investment activities. When there is recession occurred, government will increase their spending through expansionary fiscal policy and lower the tax rate. Due to COVID-19, Julia Goh, senior economist of United Overseas Bank, Malaysia Berhad, expect that government will have fiscal deficit in 2021, which is projection of 5.7% of GDP.
GDP is defined as the overall market value of all the final goods and services produced in a given time within a region. Based on the graph, the latest GDP in 2020 was amounted up to 350 billion USD. The GDP in 2019 was 364.7 billion USD, which was the highest compared to the previous year, while the lowest amounted to 301.26 billion USD in 2016. Due to the COVID-19 pandemic, the Malaysian economy contracted by 8.3% in the first half of 2020, with a fall of 17.1% in the second quarter of this year. However, the GDP of Malaysia is forecast to rise between 6.5% and 7.5% in 2021, after a 4.5% contraction in 2020 due to the pandemic of COVID-19. In 2019, relative to the previous year, the average inflation rate in Malaysia was around 0.66%. There was a slight increase in the inflation rate in Malaysia from close to 2% in 2010 to 3% to 2011. This rise may have come from initial concern about the country's declining economy.
To measure the health of country economy, unemployment rate can be used. When the unemployment rate is high, it is a signal of economic distress. As we are currently in pandemic of COVID-19, unemployment rate in Malaysia have become a big issue as economy experienced a sharp slowdown during the second quarter of the year. In August 2020, unemployment rate in Malaysia is 4.7%. Growth cycle of industry. Year by year, the retail industry has continued to grow and become very competitive. Trade tension and other geopolitical uncertainties affect the global economic growth will become slowed down. Despite the traditional way in retail industry, Aeon Malaysia have stepped forward in changing the retail landscape and keep up with the needs of consumers. Aeon have made move with thematic refurbishment of its malls such as their branches in Mid Valley, Sunway and Terbau City in Johor. At the same time, Aeon Group also focusing in their opening of Mac Value Prime supermarket that will feature a higher assortment of perishable goods. In fact, Aeon also ran their own e-commerce under the brand Shopoo. Aeon also working with partners such as Honest Bee, Happy Fresh and Shopee. Aeon Company Malaysia Berhad was set up in response to the Malaysian government invitation to Aeon Japan to help modernize the retailing industry in Malaysia. There are two segments in Aeon. First, retailing segment. It will be engaged with the operation of departmental store and supermarket. Second, property management. It will handle the shopping mall operation. The company main target customer are middle income family. As in 2020, there are 34 department store cum supermarket and there are 28 shopping malls around Malaysia. Next is ratio analysis. Financial ratio of Aeon Malaysia will play an important role of determining the investor decision. Current ratio for liquidity ratio part of Aeon company. Current ratio also tells how a company can maximize the current asset. Aeon Malaysia current ratio is considered as higher risk of distress or default. This is because the current ratio is lower than the industry average. It could be an alarming state if the current ratio is less than 1. This makes Aeon Malaysia is a riskier investment as it may struggling in paying off debt or liabilities, but different situation might affect the current ratio. The inventory turnover ratio indicates how many times the company making, selling and replacing their inventory during a given period. Aeon Malaysia inventory turnover is decreasing from year 2017 until 2019. This explains the Aeon Malaysia implies weak sales and possibly excess inventory. The debt-equity ratio is important in evaluating a company's financial leverage, and it is the reflection of the shareholder equity ability to cover all outstanding debt. Aeon Malaysia debt-equity ratio pattern is downward sloping from year 2017 until 2019. The net profit margin is the value of the company net income or their profit is generated as a percentage revenue. Moving average convergent divergence is a technical analysis indicator to spot change in strength, direction, momentum and duration of a trend in a stock price. Based on the chart, Aeon Malaysia MACD line from the 10 November 2020 until 20 December 2020 appear across above the signal line, which means we can buy the stock. Relative strength index also make a signal about the company stock whether it is bullish or bearish. From the graph, Aeon experiencing oversold from 11 November 2020 until 13 November 2020. When it is oversold, investor may think of buying the stock. Third is simple moving average. From the chart, Aeon is below the moving average from 11 November 2020 until 10 December 2020. In this situation, the investor may sell the stock as it is below the moving average. The support and resistance is used to identify the price point on a chart where the probability tends to pause or reversal of prevailing trend. From the chart, Aeon support line is at 70 cents on 10 November 2020, while resistance line is at RM 1 ringgit 14 cents on 60 December 2020.
Hello everyone, my name is Nurul Ismahawani binti Mak Ismail, matric number 252854. I represent about the KKB Engineering Berhad. For the growth cycle of industries, KKB Engineering Berhad is one of the companies which includes in construction and engineering industry. This industry have a significant role in country development, which able to generate a huge of employment opportunities in the economy. Their revenue also increased year by year and revenue of KKB Engineering Berhad also shows an increasing trend. Their chairman said company will perform well in 2020, but COVID-19 has affected the group performance. Next is competitive position. Competitors in construction industry have both in domestic and global market. In the construction industries, only 10% is a successful contractor which is have high capital capacity, while 40% of them could only maintain their business as able to meet current needs, and 50% of them were not capable to compete and remain in the industry. The competitors of KKB Engineering Berhad includes AME Elite Construction Berhad, IJM Corporation Berhad, and Gamuda Berhad. Next is fundamental analysis. About the company overview, KKB Engineering Berhad was a company which operated in the engineering and construction, also in manufacturing sectors. There are two segments that operated by the company, which are engineering and construction and manufacturing. Company engaged in civil engineering construction works in engineering and construction segment, while produce steel pipe, LPG cylinders and others related product in manufacturing segment. Next is financial ratio. The first one is current ratio, which is used by the investor to measure the liquidity of the company. It shows a volatile trend and decrease in current ratio of the company in 2018 due to a sharp increase in current liabilities such as trade and other payables. The next one is account receivable turnover. It used to measure how efficient is a company in collecting their receivable. It has an increasing trend and shows that company have quality customer which pay their debt within the allocation time. The third one is debt equity ratio. Although company has increasing trend of the ratio, but company actually has lower debt equity ratio, which indicates that company has lower debt in their capital structure. Next is net profit margin. Increasing trend of the ratio shows that company have favorable net profit margin. For example, in year 2019, company earned a profit of 10 cents for every ringgit of revenue that the company generate. Lastly is price to earning ratio. PE ratio show a decreasing trend, but high PE ratio in 2017 was due to the lower earning per share as company net profit is low during that year. The intrinsic value of KKB Engineering Berhad is lower compared to its current share price, which is RM1.62. It means the share is overvalued. Investors are suggested to sell the overvalued stock. Next is technical analysis. The first one is moving average conversion or divergence. It gives an idea to the investors about the bullish or bearish movement in the price of the stock. Based on the chart, the MACD line was crossed below its signal line in 15 December. MACD line above the signal line means a bullish signal. MACD line below its signal line means a bearish signal, which a sign of it may be the time to sell the stock. The second one is relative strength index. It is used to identify overbought or oversold condition in the stock price. Based on the chart, the value of RSI of KKB Engineering Berhad is around 50%, which is a normal rank. In 3 December, it equal to 70%, which is a signal of overvalued stock and has a bullish condition. It is a sign for the investor to sell the stock. The third one is simple moving average, which indicate the trend of the stock price. Simple moving average of the company shows a volatile trend from 10 November until 20 December. It experienced an uptrend until 18 December, but after that it shows a downtrend. Investor was suggested to buy the stock when there is uptrend. Lastly is support and resistance, which help the investors analyze the direction of the market. Support line of the company during the trading days is at RM1.45. At this time, buyer tend to buy the stock as the price is low but seller less likely to sell, while the resistance line is at RM1.84. At this time, seller are more likely to sell the stock but buyer less likely to buy the stock as the stock become expensive.
My name is Norhanis binti Cik Ibrahim. Matric number 254713. My EG average liquidity position is higher than the market average. For my EG, Service Berhad have more liquid financial asset than the total liabilities. In such a way, for the ratio between the turnover and the balance sheet of the company is a sign that my EG Service Berhad could easily pay off its debt with ease. Since its reserves are far from stretched, they are considered to have the ability to generate cash, so it's fair that they do not have a huge debt. This could explain the relative low current ratio of this company. My EG activity and behavior measure are all at or above average. This company consistently have very high turnover measure, which in turn makes significant contribution not to the on firm liquidity position but so to its profitability. There's no doubt the company has been able to get a lot of more from its asset than the industry as a whole. Despite its much weaker balance sheet, the company have leverage position seems well controlled. It tends to own a very low level of financial debt in its financial structure than the average company in the technology service industry in which it operates. Some of the reward for this judicious of debt come in the form of the coverage ratio that is well above the average. The profitability measure for my EG is clear. They are fairly profitable. Return on asset, which usually stronger than the industry, and even ROE are all great for the company. It is clear that my EG is taking excellent care of of its profit, acquiring new customer and retaining enough stock to keep shareholder happy. In summary, the analysis of the company is very profitable and has very well management. The inferior result caused by this strategy are shown in common stock ratio that consistently superior between the industry average.
The business segment of the CEP had a CAGR of 14% from the year 2011 to 2016. The prospect for the e-commerce logistics sector is focused on the broadening of the market and the size of the network through the formation of strategic association between e-commerce players and freight forwarders, integration and incorporation to achieve scale investment in logistic services such as warehouses, automation and e-fulfillment hubs. TASCO Berhad has been a dominant player in the country's air and sea transport industry. Nevertheless, there are few freight forwarders that compete with TASCO, such as ANC Global Sdn Berhad, Artar Logistics Sdn Berhad, Absolute Sdn Berhad, and Astraco Logistics. With the partnerships that has been made between TASCO and Yili Corp Berhad in December 2017 has made TASCO is different with other freight forwarders in Malaysia, as they are providing inventory management, warehousing, and logistic services unlike others. TASCO Berhad provides air freight forwarding services including air import and export, customs brokerage, hand carrying and door-to-door delivery under the name of USEN Global Logistic Air and Sea Service. It also offers maritime freight forwarding facilities including steamship, liner room reservation and announcement of daily shipping schedules, port-to-port ocean transport arrangement, door-to-door services, consolidations of shipping, preparation of shipment details and maritime insurance arrangement, and advisory services. TASCO Berhad current ratio has shown a dropping trend from 2.5 in 2018 to 2.01 in 2019. Next, keep dropping to 1.5 in 2020. This falling current ratio trend is occurred because of the dropping demand of logistic industry, especially when the first wave pandemic happened that has made the economics freeze globally. Next, TASCO's receivable turnover ratio shows a growing movement from 4.12 times in 2018 to 5.50 times in 2019 and keep increase reaching to 7.34 times in 2020. This shows that TASCO has a high percentage of customers who pay their debts quickly, and it also indicates that TASCO is open to give more credits to their customers. For debt equity ratio, year 2019 shows the highest ratio, which is 0.85 times, while in year 2018 was 0.55 and in year 2020 is at 0.71 times. I already calculated for intrinsic value for TASCO's Berhad. For year 2021, I got 3 ringgit 93 cents, and in 2022 I got 4 ringgit 21 cents, and in 2023 I got 4 ringgit and 67 cents. From the MACD chart, we can see that during the period from 10 November until 20 December, it has 4-time crossover, which is a good indicator for investor to buy a stock. Next, the Relative Strength Index (RSI) is a technical metric used for the study of the stock market. TASCO Berhad has a high RSI, which indicates that the stock cost is progressively steady. Based on the chart above, the stock price was quite volatile because of the COVID-19 and the news of the vaccine has made uncertainty in the market. However, if we refer to the figure above, we could see the light blue line is increasing, which indicates that in overall the stock is going on spike. On 8 December 2020, the price has dropped to the lowest, which at 2 ringgit 41 cents. By that time, investors took the chance to buy more of the stock, while the bidders are not willing to sell their stock at the lowest price. We can see there is an ability in the zone that the price will bullish again, and the assumptions was true, which we can see the price is rising until it reaches the resistance zones.
Wakahudin Berhad is Malaysia's leading producer of industrial rubber hoses. It mainly exports to more than 70 countries, and for year 2018 revenue was exported primarily to the US, Canada, Europe and Asia, compared with 39.7 million in the corresponding quarter for year 2014. The company reported revenue of 37.9 million. In the era, profit before tax rose 60% year on year to 11.2 million, while net profit grew by 15% to 8.5 million. The company recorded revenue of 119.8 million for the 9 months for year 2015, delivering 10% year-on-year rise. In the 9-month period, profit before tax increased 32% to 37.1 million, while the net profit leapt 31% to 28.4 million. Since the 20th century, Malaysia has been a leader in the manufacture of natural rubber. There are many industrial rubber hose companies in Malaysia, which is Hefty Hose, Houseflex, Flytech, Unigawa, which also the rival of Welker Holdings. Welker Group is the biggest multinational producer of industrial rubber hoses in Malaysia. The company has expanded to more than 6 major application markets, including air and water, welding and gas, oil and fuel, automotive, shipbuilding, and food and beverage. The history of the company dates back to the mid-90s, when the managing director set up Welker Hose and Berhad to engage in the rubber hose manufacturing business for consumers who primarily distribute rubber hose to OEM suppliers and manufacturers. The marketing strategies in the initial period were centered in Europe, USA and Canada. As a result of growing requests from the current and new clients from overseas for their products, they began producing a broader variety of rubber hoses within a few years of the launch of the business. We move next to the ratio analysis. The first one is liquidity ratio. In the chart depicted, the current ratio of the company in 2017 is 4.59 and decreasing in year 2018, which is 3.83, but increased back in 2019 with a ratio of 4.66. This may reflect a rise in operating risk. The higher the ratio, the more liquid the firm, as the company's acceptable current ratio is 2, which means that this is a secure financial position for the company to perform its short-term obligation. The second one is activity ratio. The ratio reflects a pattern of volatility over the last 3 years. The ratio for year 2017 is 1.23 and increased to 1.31 in year 2018. Recently, the ratio decreased again to 1.23 in 2019. The incremental in this ratio shows the more efficiently the asset have been utilized to generate sales. Then, leverage ratio. The equity multiplier for Welker Holding in year 2017 is 1.24, decreased to 1.21 and continuously dropped to 1.19. This indicates that the company's debt level are extremely low for 3 years. Next, profitability ratio. For return on asset, the company ROE in year 2017 to 2019 shows a volatility. The ROA in 2017 is 0.28 and decreased to 0.24 in 2018 and increased back to 0.27 in year 2019. As the net income decreased, the ROA also decreased. The lower ratio indicates that the company is inefficient in using its asset to generate profit. So the last one is intrinsic value. The intrinsic value for the company stock in 2020 is 8 ringgit 30 cent, 9 ringgit in 2021 and 9 ringgit and 76 cents in 2022. Last, we move to the technical analysis. The first one is MACD. The blue line represents the potential buying signal, while the orange line potential selling signal. During the trading day, it shows a rapid fall. This indicates the stock price is expected to be decreased, and it is a bad signal where the stock it is not worth to buy for the investors. Next, the RSI. During the period from the trading day, the RSI was below 70. The RSI peaked at the 67% mark during downtrend rather than 70%, which might be used by investor to signal bearish condition more accurately. Then the moving average. The trend shows volatility in the price of stock in the early trading until 21 of November. As stated in the bullish signal, means that the price is moving higher. Afterward, the stock prices is bearish until the end of the trading day, means the price is moving lower. And lastly, support and resistance. The support line during this time period is 1 ringgit and 5 cents, while the resistance line is 1 ringgit and 24 cents. Support line reflecting the amount of which demand is sufficiently high to keep the supply from dropping lower. Meanwhile, the resistance line reflects the level to which supply is too strong to keep the stock from going further.
through the 5 company, we can gain a lot of insight into their longevity and how well they are doing. My EG can put out a strong competition than other company. The data of the 4 other company representative equal or stronger return on asset and performance like this one put among the industry leaders. It is the most important because it has higher ROE, price to earning ratio, and return on asset. My AG has become well known upcoming business that has been able to make its name and gain wide recognition in the industry. The company has proven that it is reliable performance. The main thing we concern right now is whether my EG will do well even in the if the economy environment is weak.